But the S&P 500 didn't wait last week. It's coming off its worst week since June and just about 2% above the recent low. But your next guest checked the charts and says we could retest that level soon or maybe even head lower. Let's welcome Ari Wald, Managing Director and Head of Technology Analysis at Oppenheimer. The bears are growling this show, Ari, and I want our viewers and listeners to know, I mean, don't at me on this. The Scott's been negative, and you seem like you're backing that view up with the technicals, and I want to make clear, we did not plan this, not like some piling on here.
Right, yeah, no, we didn't plan this. And I think it's also important to distinguish time horizon here. We probably cite a little bit more positively longer term, being of the view that this is a final leg lower of this bear cycle. I think we're getting close, but not there yet. So I think the incremental change in recent weeks is just the rollover in these mega cap tech stocks that dominate the cap weighted indexes. We were previously of the higher low camp. We thought the S&P would come down into 3,800. That was a key level for us. And now with the rollover in mega caps, I think there is the possibility for a less intense test of the prior low or even a lower low. The key point being is that the weakness in the mega caps is masking some internal improvement that we're seeing underneath the surface. And again, making the case that this could be the final leg lower and setting up a turn in the cycle in the fourth quarter when seasonals do improve.
Well, I think Scott actually did say, and I don't want to quote him, but he's sitting right here, that you were a little more optimistic in December, right? I mean, you thought in December we could see a turn higher for equities. You're negative between now and then.
Yeah, I think that, somewhere in here, October, when I put a date on it, is, the market will flush out, and that'll be a buying opportunity.
So does that sound, Ari, like it matches up with the technicals that you are seeing?
That follows the seasonal roadmap as well. Seasonals for us is secondary confirmation. We're not going to use them in isolation, but when our other indicators are confirming that, it does make for a compelling argument. For instance, breadth was deteriorating coming into the year, into what was the worst stretch of the 4-year presidential cycle, the first half of the midterm year. That typically improves significantly in the fourth quarter. Midterm years typically bottom in mid-October. And again, with that improvement that we're seeing underneath the surface with the New York Stock Exchange advanced decline line in August, coming off its highest level since January, so far holding its 2Q lows. I think as long as that is still the case, you do have that set up for a strong run into year end.
I was going to save this for an RBI, this thing I do in the mornings, Ari, but I'll do it now because I'm going to be off on Friday. Next week is historically the worst week of the year for the stock market. Next week. I mean, do you think there could be some kind of big flush coming?
There could be. The day-to-day, the week-to-week is always tricky. And when you have a poor trend and not being, the base build, building a base is difficult. And I guess this is not the time of year to expect that upturn just yet. So history would suggest, that volatility could linger here. I think it's important to understand your time horizon. That I guess I'm making the case that it could snap back pretty quickly a few weeks post that.
All right, Wald, Oppenheimer on the tape. Could be weak going into year end, but then maybe a turn, a little optimism there. All right, thank you very much.